Can 1,000 rupees a month really make you rich in 5 years? It sounds like a stretch, right? But here's the thing, you don't need lakhs to start investing. All you need is 1,000 rupees, a little bit of knowledge, and the right stocks to begin your own SIP journey. Let's break it down. When we hear the word SIP, we usually think of mutual funds, don't we? It's the classic way to invest a fixed amount every month. But did you know you can create your very own SIP using individual stocks? The rule is exactly the same. You invest the same amount at the same time every single month. The only difference is this time you're the fund manager. You pick the stocks. So what can a simple 1,000 rupee SIP do? Let's look at the magic of compounding. If you invest just 1,000 rupees every month for 5 years with a reasonable return of around 12 to 15%, your total investment of 60,000 rupees could grow to nearly 90,000. It's all about the power of compounding, which relies on two simple ingredients, time and consistency. The longer you stay invested and the more disciplined you are, the harder your money works for you. It's not about timing the market. It's about time in the market. All right, let's get to the main event. Which stocks under 150 rupees could you consider for your SIP? I've picked 3 interesting ones, each with a different risk profile. First up, our core, steady player, Union Bank of India. Think of Union Bank as your reliable friend. It's not flashy or exciting, but it's solid and dependable. As a public sector undertaking, it's going through a major turnaround. Its profits have been consistently growing and, more importantly, its non-performing assets, or NPAs, are coming down. That's a huge green flag. Trading at around 140 rupees with a low price to earning ratio, it still looks undervalued compared to its peers. This makes it a great candidate for the core of your SIPA low risk, stable foundation for your portfolio. Next, we have our growth play, IDBI Bank. If Union Bank is the steady student, IDBI is the one who has finally gotten serious right before the final exams and is now acing every test. This bank has been a massive turnaround story. With backing from both the government and LIC, it's cleaned up its books, brought down its bad loans, and is on a clear path to recovery. There's also a lot of buzz about its privatization, which could unlock significant value for investors. However, with this potential for higher growth comes moderate risk. Things are looking good, but it's still a comeback story in progress. So, for IDBI, you SIP, but you do it with a bit of caution. And for our third pick, we have a theme-based stock, Vikas Nigam Ltd, or RVNL. This is the stock that lets you ride the India growth train ... literally. RVNL is a key player in building our country's railway infrastructure tracks, bridges, workshops, you name it. As the government pushes hard on infrastructure development, companies like RVNL are in a sweet spot with a massive order book. But here's the catch. Everyone knows this, which is why its PE ratio is a bit on the higher side or overheated. The growth potential is huge, but so is the risk. Think of it like a fast train. It can take you to your destination quickly, but sometimes trains can get delayed or face hurdles. So for RVNL, you invest a small portion for the long journey. So how do you put this all together with just 1,000 rupees? Instead of trying to guess which one of these three will be the breakout star, why not create a balanced mix? This is what I call the bucket plan. You split your 1,000 rupees every month. Let's say you put 400 rupees into the low-risk stable Union Bank. Then you allocate 300 rupees to the medium-risk growth story of IDBI Bank, and the final 300 rupees go into the higher risk, higher reward theme of RVNL. By doing this, you're not putting all your eggs in one basket. You've created a diversified, balanced SIP portfolio. This smart allocation helps keep your overall risk in check while still giving you exposure to steady, moderate, and high-growth opportunities, based on a conservative 12 to 14% annual growth. This 1,000 rupee SIP could potentially grow to around 90,000 to 95,000 rupees in just 5 years. The key is balance and discipline. Now, for some real talk, I need to be very clear about this. This is not financial advice. I am not a SEBI-registered advisor. This video is purely for educational purposes to show you how small, consistent investing can work if you do it smartly and patiently. The stock market is subject to risks, and you should always do your own research or consult with a qualified financial advisor before making any investment decisions. My goal is to give you ideas and frameworks, not direct recommendations. Please invest wisely. So, I'm curious to know what you think. Which of these three stocks would you pick for your 1,000 rupee SIP? Would you go for the stability of Union Bank, the growth potential of IDBI, the infra theme of RVNL, or maybe a mix of all three? Let me know your choice by commenting below or voting in the poll right here. If you found this breakdown helpful and want more smart money ideas, do me a huge favor and hit that like button. Share this video with a friend who's looking to start their investment journey. And of course, subscribe to ASRIT for more content like this. Thanks for watching, and I'll see you in the next video.